Good afternoon. It's afternoon on my end, and how's everyone doing? So, I am still on, will I call it a series? Yeah, I got a bunch of requests on stocks to just share fundamental analysis on. And today I'm looking at Oando. I would say that Oando, of all I'm not sure, I've lost count. I think I've probably done over 10 videos like this. Oando has been the most difficult stock to forecast. The biggest reason behind that is Oando is yet to release first quarter 2025 results. So it's hard to give an accurate forecast, and it's very likely that maybe once the first quarter numbers out, if they are significantly lower or larger, then yeah, the ideal thing to do is to rework your forecast. But I said, look, it's nothing like a good challenge, and no excuses as an analyst. You just have to find a way to analyze a stock, whether you have the data that you need or not. You have to make do with what you have. So what I did was to say, look, let's take numbers for the most recent quarter, Q4 2024. Now to arrive at that, and if you can see my screen on your, is that right? Yeah, it's right on my end, upper right. What I did was to take FY 2024 numbers, take 9-month 2024 numbers, and when you subtract, you you get the figures for Q4 2024. And so what I did was to say, look, let's assume you have a similar run rate all through the year. It means that you could end FY 2025 with 48 naira in earnings. And even if you want to use a base case scenario of, okay, let's say they end the year with maybe 25 naira in earnings. Worst case scenario, if you're using the average price earnings ratio on the exchange, that would be a 25 times 7. And let's see, my calculator is far from me. 25 times 7, 20 times 7 is 140. 5 times 7 is 35. So that's 175. I mean, I think a base case scenario, one could have a 1 year target price of maybe 100 and something naira, 150 naira. But anyways, what I did was to create three scenarios. My bull case scenario, 20 times earnings. That gives me 960. Now I use that as bull case because when you look at other companies, and in the coming days you'd see my videos on Seplat and Co. They are trading at what? Around 16, 20 something times earnings. Seplat trading around 20 something times earnings. If you analyze Q1 and divide by current price, Aradel trading around 16 times earnings. So if you say, look, worst case scenario is Oando does the same 18 naira they do last year, put say 10x or 12x multiple, you're looking at 180 to a bit over that, right? So I gave two scenarios: 28x earnings because that's where its peers, other players in that space are trading. You have a 960. Base case earnings, say 10x of full year 2025, get 480. Bear case meaning 7x, trading around where the average P on the ratio is. That gives you a 48 by 7. And if my math is correct, that's 336. Now, if you use a bear case scenario using a discounted cash flow model, you have around 47 naira and 49 kobo, meaning Oando probably should trade lower than what it is. Now, I didn't bother with that page because it just have been too much numbers. And much as I'm trying to do fundamental analysis, the reality is attention spans are going. So once your video is extremely long, nobody is paying attention to what you're saying. So, I mean, maybe if I'm chance, I probably would put up a post on the Green Ticker website just to explain that, right? Now, beyond that, I also have a couple of numbers I'm looking at. And the factors that I feel work against this stock, biggest issue is crude oil volatility oil price volatility. Oando is more of a trading company than a production company, so they make more money from trading. Even though with the acquisitions that they've done, NAOC and Co, I think they would probably scale up other areas. Other challenges you have negative retained earnings. Essentially, the tank is running empty. So Ando is not paying a dividend anytime soon. It's not going to pay a dividend for FY 2025. I don't know about FY 26, but what that means is that the earliest anyone is going to get a dividend from Ando is probably calendar year 2027. Dividends are a big deal in Nigeria. I saw a tweet somewhere by dividend diplomats. Why do you like dividends so much? It's quite simple. Cash flow is predictable. If I see your cash flow, I see your retained earnings, I can predict dividends and I can work out my return on investment based on your dividend yield. So you ain't paying dividends anytime soon. Negative working capital. You have current liabilities exceeding current assets. Essentially, this company is operating on loans, which isn't strange. Oil and gas is an intensive space, but when you essentially have no equity, any and in a high interest rate environment, in fact, when you look at it, I wonder what the dollar components of their loans are because yes, crude oil is a USD thing. You need USD loans and all that. So, sure, income is in also in USD, but it's still a Nigerian firm, so you must have some exposure in Nigeria in terms of Nigerian operations and all that. So, it's a no for me. Then, lastly, there is potential dilution if slash when the equity raise happens. Um, if you read the FY 2024 financial statement, you see that at some point in time, the company has kind of touched on it a bit that look, we need to raise equity. So they're going to have to issue shares and sell. And what that then means is that you have a bigger volume of shares in issue and your earnings per share comes down. Um, if you also look at the cash flow statement, I mean, your current liabilities are almost I think 6 or 7 times your your current assets. It means that you have a lot of loans to deal with. So um, I don't see this stock. In my view, this stock is a hold, and analyst lingo, a hold simply means that do not buy or do not sell. So you just watch and see. To be candid, some people might tell you under review. So another way maybe to look at it is to say, well, hold and let's see how Q1 numbers um, look like. And I must say that Q1 numbers are extremely late. Q1 is January, February, March for this firm. June is wrapping up in what 7 days now. So those numbers should have been out like ASAP. I hope you found this useful. Please note this is not financial advice. Do your own research. And let me know what you think. Do you agree, disagree? Alternate views are always welcome. Let's learn together. Have a good day ahead.